Hello, welcome to the Global View here at Ausbiz. I'm Andrew Gagan. Thanks for joining us here on this Thursday. Let's get across what developed overnight. Global equities falling, weighed down by tech stocks as investors continue to question spending on artificial intelligence and those lofty valuations, with the broader tech sector taking on more debt to expand AI capabilities. On Wall Street, the main indices falling for a fourth consecutive session, with the S&P 500 and NASDAQ at three-week lows. Stocks, specifically Nvidia, fell, while chipmaker Broadcom also dropped, sending the broader chips index lower. Alphabet shares fell on reports that its Google unit is taking on a new initiative to erode Nvidia's software advantage. ORCL fell heavily on reports that the cloud company's largest data center partner, Blue Owl Capital, will not back a $10 billion deal for its next facility. Amazon gained initially on reports that the company is in talks to invest about $10 billion in ChatGPT maker OpenAI. Tesla shares reversed direction, while Microsoft was the outlier there, edging slightly higher. And in the latest development in the battle for Warner Brothers Discovery, its board has rejected Paramount Skydance's $108.4 billion hostile takeover bid, calling the offer illusory, as it's accused the studio giant of misleading shareholders about its financing. Paramount and Netflix are battling to win control of Warner Brothers, which comes with its prize film and TV studios, as well as HBO Max streaming service. Cereal maker General Mills beat estimates for second quarter sales and profits, and shares of precious metal miners gained, as both gold and silver rose, with silver hitting a new record. Well, in the UK, inflation unexpectedly fell to 3.2% in November, from 3.6% the month before, firming odds of a cut to interest rates by the Bank of England. Financial markets pricing in a more than 90% chance of the central bank cutting rates by 0.25% to 3.75% when it meets tonight. Meanwhile, US consumer price inflation data for November will be released tonight. Ahead of that, FOMC member Christopher Waller has supported a gradual easing of monetary policy, saying because inflation is still up, we can take our time. There's no rush to get it down. We just can steadily kind of bring the policy rate down towards neutral. Well, the US two-year Treasury yield is around 3.5%, the 10-year close to 4.18. Australian three-year government bond yields have risen to 4.22, the 10-year at 4.82%. The US dollar index is up on the day. The British pound falling around 0.5% following that UK inflation data. The Aussie has fallen back to 66 US cents. This after the government's mid-year fiscal update projected the budget deficit would now likely be slightly smaller than forecast. On the commodities front, oil prices have rebounded after President Trump ordered a blockade of all oil tankers under sanctions entering and leaving Venezuela, raising global political tensions and easing concerns about a surplus of global crude. Brent crude futures up around 1% at just under $60 a barrel. Gold has gained more than 0.5%, sitting at around $4,340 an ounce. Spot silver jumping 4% to $66 an ounce. That's a new record. Copper was up 1.5%. Iron ore rising more than 1% to 106 US a tonne. And Bitcoin, well, that has fallen back below, in fact, just around 86,000 US dollars. Let's get across those market moves. Ira Epstein joining us from Linn and Associates. Ira, welcome back. Let's start stateside on Wall Street there. I guess really investors, well, as I mentioned there, continue to worry about that AI trade. Let's though focus first on the data. Crucially, tonight, your time, you're going to, well, tomorrow, your time, I should say, you're going to get inflation. What are the risks here? What are you expecting?
Well, moderation, probably. That's what the market's been trying to say. None of the Fed members seem to, even if the inflation ticks up, get too worried about it. They seem to be focused right now more or less on the jobs market in the U.S. because when you look at the lost month of jobs market, people are saying it was 100,000 plus in lost jobs. So that's what's got them concerned. The three main contenders for the Fed position continue to say to the U.S. that they think the tariffs, the impact of that are short-lived, that the markets will retreat, and that's where you're at. But that's not what we're dealing with right now, Andrew. We're dealing with a question about whether all the trillions of dollars that's being spent by American companies is being done properly, and is the AI going to be as important as we believe it will be? And that is what you're looking at each day, because people are now questioning everything. They're looking and saying, well, Blue Owl backing away from Oracle's deal. Maybe people were talking too much in the utility, that all this electricity usage. We had a city in Arizona today vote down allowing and that, by the way, that makes sense for them because Arizona is an arid climate, but voting down a data center going there. And then I happen to have moved into beautiful Indiana, in right across the border from Illinois, for many reasons, but much prettier in my opinion. But even here in a place, Michigan City, they call it, in Indiana of all things, they are questioning should they allow data centers and the impact on what's going on. And you see that nobody's addressing budgets. Really, that's not going on in a big way. And that's impacted the gold, which in turn impacted the silver, which in turn, copper started the whole thing when copper, and people don't realize that the copper market 6 months ago, when we started getting those problems out of Peru and Chile, and wondering where's this copper, these damages to these major mines going to be made up from, and copper took off. Well, after that, shortly, gold took off. Now silver's joined the parade, and very quietly, platinum has just kept running. It hasn't stopped. It's been one of the stellar performers of the year.
So, Ira, well, this is the last opportunity we have to speak to you before the new year. Given that AI trade, yeah, we're not there yet. So obviously, as you mentioned there, investors concerned whether all this spending on AI is going to pay off. Do you think in 2026 we're going to get those distinct winners and losers?
Well, it's almost, let's go back to the iPhone. When it first came out, we already had portable phones. I remember carrying one on my shoulder where you had your battery pack and then how they all worked. So the answer is yes. I do think AI is going to work. There won't be all winners. That is the problem that the market's facing right now. The market has to realize just because you go in and you spend $1 trillion or hundreds of billions of dollars, that doesn't mean you'll make your money back. There will be companies that do, and there will be, just like in the dot-com bubble, there will be companies that simply can't do it. And that's what we're dealing with right now. People are looking at year-end. In the United States, it's rolling portfolios, getting rid of things you may not want, getting into things that you do want for the next year, a lot of tax advantages, questioning what they should do. Then the reality of the situation, PEs, and then earnings. Then the reality of the situation is there payback on this? That is the big thing. If you can monetize it, which I believe it can be done, and will be done, then I think there'll be payback for a number of companies. But I'm going to repeat, not everybody can be a winner.
Well, speaking of winners and potential losers, interested to get your view on that battle for Warner Brothers Discovery. How do you see that playing out at the moment?
Well, first of all, the bidding isn't done. Both sides are going to bid more money. I still question Netflix owning Warner Brothers, and will it get through the U.S. government? It's an easier, I think, regulatory buy for Paramount to do it. The problem is the question of the Ellison money from Oracle. Is it really at stake? Are they going to do what they say? And the guarantee. Right now, according to Netflix, they're getting a lot of positive feedback from the people that they put the bid out there with. You saw that the board of Warner Brothers, they want to see Netflix take it over. If you're a movie chain, you don't want that. I can tell you that in America, because Netflix competes directly with it. Why do they want to do that? I owned a movie theater, a big part of one, put it together. And they don't make money. I mean, the whole idea of a movie theater was always the concessions. So, eventually these big companies will tire of that. Does AMC make money? Does Cinemark? I can go on and on down the list. So, got to be very careful with all this. And you've got to understand the thinking at year end. I can't say that enough. And I want to wish one and all that are listening to us both a happy new year and happy holidays. But you got to think of your money. On this pullback, I think the market's a buy. I think you're going to get the Santa Claus rally. People should study Yale Hirsch, the Stock Trader's Almanac. You begin 4 business days before Christmas. It goes to the first 2 days after business days, after the first of the year, and it's worked a large amount of time. I don't know anything in the market that works all the time, but on a break going this way towards the Christmas time frame, I think that the odds favor that you'll get a bounce. Whether you hit new highs in the market, that's not what the bounce is all about. It's about you get a bounce at that Christmas time frame.
Ira, a check in on commodities. You mentioned precious metals. They continue to run. We look at silver, what's going on there. How do you see that as we move into the new year, I guess, given that macro backdrop at the same time?
If we were in a classroom, I'd say higher. But in the practical room, as running a brokerage firm, watching margins, I don't see how anyone can trade silver when the daily range is between $2 and $4 an ounce. I mean, for the margins, it's unbelievable. The swings are unbelievable. When you're trading 5,000 ounces at a time, it's big money, even 1,000 ounces at a time. So you've got to pick your spot. The market is forcing traders to buy the rally, not buy a dip. There's a very big difference there. So eventually what happens is you get caught, there'll be a washout, and away you go. Am I good at picking tops? I'm terrible. Why would I want to pick a top? That's not what you want to do. I'll give you another thing that keeps it going. As long as the stock market doesn't get a rally in it, there's nowhere else to go. It is the area that's working, and you want to pay attention to that. The rally in crude? Nah, I think that is just the president of the United States threatening Venezuela. He called a conference today and tried to call the oil people that used to be in Venezuela. Would they be willing to go back if Maduro was gone? So the pressure is coming from all angles, and obviously China's looking at that because Venezuela, their big client, is China. But China does great. It buys discounted oil that Russia can't sell elsewhere, and it does the same with Venezuela. So you've got to understand the game and the nature of the game as to what's going on. The rally is won because you've temporarily hurt some supply, not that there's more demand.
Ira, we've really enjoyed speaking with you across the course of the year. Enjoy your holidays. We look forward to catching up with you again in the new year.
You too, and to all of you, thanks for watching me.
Ira Epstein from Linn & Associates. All right, let's check the local market then. And we're expecting a fairly modestly lower open there. So SPY futures off just 9 points. They'll be focused certainly on the energy complex that's received a lift off those sanctions that we're seeing out of Venezuela at the moment with the price of oil rising, but also in that space too. Focus on Woodside. Meg O'Neill announcing that she's leaving the company immediately to head up BP. We'll get across that and much more in just a moment.